I trade. Hi, it's Charlie giving you Saturday's video. I hope you're very well. So I thought I'd do a video on my general approach to trading here and talk about, some of the things I look for, but also, how that can translate to how our members trade as well over at Charlie Burton Trading. Because as I have got older, not my style of trading has changed, but certainly maybe the time frames that I trade off has changed. So I like the ability to get into a trade, and if I see the potential to have a run on it, then I'll happily stay in that trade for weeks or months if it's a larger trend. So. But for a lot of traders, they only want to stay in trades for very short periods, maybe even if you forget day trading exactly. But if you look at even swing traders, a lot of swing traders might only want to be in a trade, from a few days to maybe up to a couple of weeks or so. And so you can apply the same methods, doesn't matter what time frames you're looking at, and do the same things, but on the lighter time frames as well. So I tend to trade off of, I'll still execute off of hourly charts or 4 hourly charts, but then what I might do is I'll use multiple time frame analysis to then turn an entry off from what might actually be a break on a 4-hour time frame, for example, but then I'm using that in conjunction with multiple time frame analysis. So let's go and have a look at the New Zealand dollar here. So if we go out to a monthly chart first of all, so of course I've got things that I use to get methods and techniques to get myself into trades, whether it's a trend-based trade or at times if it's a counter trend based trade. So I will trade on either side of the market. Now this is quite a nice example, this New Zealand dollar here, because as we can see, this is the monthly chart. We can see that the New Zealand dollar had this long-term, I don't think it goes back any further there, yeah, this long-term horizontal support zone, and it doesn't, and again, it doesn't necessarily matter. Don't worry too much on whether you're right or not with regards to trend lines or horizontal lines. It depends, because with technical analysis, there's always an element of subjectivity. So, because for example, and this is actually quite a nice, this line's quite clean here. We can see it goes back to this low here, to these lows here, and then through, and then we can see it bounced off on this month here, then came back through, thought about it for a while, and then has come through. So, but sometimes you might have a line where, oops, what's happened there? Let's drag this back down. Why did it do that? Where it's playing up. Let me press pause. So I've drawn the line on just where it's slicing through a little bit more, and this is horrible line because that's not actually correct. but sometimes what I'm trying to get at is you might get more touches if it was needed on this occasion by having the line a little bit higher. So don't worry too much about whether your line is, because there might have been some more touches a little bit, or other lows a little bit higher here, and you want to marry them up a little bit more. That's absolutely fine in my book. So if this low had been about where my cursor is here, I may well have had this horizontal line just that little bit higher to slice through more touches there of the line. That's not actually the case, and it should be back down where I just had it, but it's, oh yeah, look, it's because I've got the projector on, it messes up with the charts. Let me just press pause again. Okay, and so the higher time frame comes first. So some simple things that I'll look at will be, simple support and resistance zones. Support, horizontal support, resistance, trend lines, and channels, the basics of technical analysis. And then I'll have some moving averages on my chart. Now I've got some of my other longer term moving averages and shorter term moving averages off at the moment because otherwise it might be a bit cluttered here for when I'm projecting. But what I will be looking at is where is price relative to certain key moving averages, such as the 50, which is my black moving average. My blue moving average on this chart is the 20 moving average as well. So I want to see what the relationship is between price and its average price. And moving averages, so if we're below something like the 50 period, then as a general rule of thumb, of course, that's telling us that the trend is to the downside. It's below its 50 period moving average. Then it's telling us the medium-term trend is down. We can see that in the price, but what we want to see is the price's relationship with those moving averages as well. Anyway, so those are some of the things that I'll be looking at. Now, if I take something like the New Zealand dollar here, on this monthly chart, we can see that it's thought about it after coming back down to this long-term support line, and then it broke through in August, and here we are in September still following through. So we've now got this potential for the Kiwi to maybe come down to 55. You know, if I was looking at this chart from a technical perspective, then, and it doesn't matter if you'll see, it doesn't matter if you'll think, oh no, but Charlie, there's some sort of reversal signals at the moment. It doesn't matter. It doesn't matter. On the short term, anything can happen, but on this time frame, even on this time frame, this market could bounce at any time, like always, but the general trend is to the downside. So if I'm looking for opportunities and we've broken a key support zone, then I'm obviously going to be looking for opportunities on the downside until we get to a price zone where my analysis is telling me, look, this is major support here, and I maybe want to actually be looking to buy. So top-down analysis is really important. So I'll go from the likes of the monthly chart, I'll go to the weekly chart and look at how the price action's there on the weekly, right the way down, of course, to the daily chart, which is more the operational window, so to speak. We're seeing more of the day-to-day price action there, but being mindful of the bigger time frame. So it doesn't matter if you are trading, let's say, off of hourly charts, you might still want to be looking at your higher time frames, such as a 4-hour chart or maybe even a daily chart, to get an overall view of the bigger picture from the hourly. So if you're trading the hourly, you want to see, well, what's the trend on the 4-hourly and the daily? You probably don't need to be going out to the monthly. So again, it's all a case of perspective. And so and then you can trade as frequently or as non-frequently as you want. Now, I am constantly in trades. I'm very, very rarely flat, but that doesn't mean to say that I'm taking lots of trades every day anymore. I'm not. It's just that I'm holding on to trades for long periods, and then I might be establishing new positions and such likes. So, but then we have members who will be in and out more using the same techniques, and they'll be in and out more of various trades. We had one of our members just wrote in this week who's made 15,000 on a 20,000 account. That's fantastic. What's that, 75% gain? And as I've said before, we've had other members who have made some whopping gains. Like one member made like 1.1 million over a period of a few months. And everybody is in our membership is from our member in our trading room, and all our members. They're all using the same tools, but we can use them on different time frames, obviously different markets as well. So everyone's going to be trading the same. We're using the same tools, but in a slightly different way. Okay. So what we do and what I do is that top-down analysis first of all. So I'm looking at higher time frame analysis. Depending on whatever the time frame of reference is. So in this example, I've started off on a monthly and taken it down to a daily. But if I was wanting to trade off of an hourly chart, then I'd probably be looking at a daily, 4-hourly chart and then the hourly. And if I was wanting to trade off the 5-minute chart, then probably my hourly chart would be my anchor, and then I'd be looking at the 4-hour chart from there. Anyway, so that's one thing that I'm going to be looking at. The other things I'm going to be looking at is intermarket analysis. So we're looking at the New Zealand dollar here. Now, if I'm looking to trade the New Zealand dollar, I do want to see what other pairs against the dollar are doing as well, especially the Aussie dollar, because the Kiwi and the Aussie do tend to move in a similar vein because the New Zealand, their economy is sort of tied to the Aussie or Australia to an extent, and their currencies will move in a similar vein. So again, a bit of intermarket analysis. Are they doing the same thing? So if I'm looking at some sort of technical break or something like that on one of them, I want to make sure the other one looks primed for it as well. So, and even beyond that, I'm still going to be looking at what other drivers are there for the likes of the Aussie and the Kiwi. So, for example, the stock market. So I'd want to go and have a look and see what the Nasdaq's doing, because the stock market does influence the Aussie and the Kiwi. They're more sensitive to moves that might go on in the stock market. So they have a higher sensitivity than that of cable or euro. Now, cable and euro will be sensitive to the stock market, but not as much as these two. So again, bit of intermarket analysis is really important if I'm looking at trading the Kiwi, but also even if I was looking at trading the Kiwi, I would still want to see, well, what's the pound dollar doing? What's the euro dollar doing? So then I'm getting a better perspective of what these various currencies or a currency that I'm looking to trade is doing relative to the other ones. Now, of course, we can also look at the dollar index, and that's useful as well. The only thing with the dollar index, and it is useful, if I bring up the dollar index though is to a large extent an upside down chart of the euro. Okay, so if I now go to the dollar index here, it will look like almost a mirror image of the euro, so a bit of an upside down image of the euro there. So don't get me wrong, it's still great to look at, but you can't just say, oh, I just look at the dollar index, because effectively all you're looking at then is an upside down euro dollar. So we do need to still individually look across our currencies. So intermarket analysis, intermarket analysis is important as well. And then what else do I want to go through is sentiment. So I want to look at sentiment, and both from a retail perspective and from an institutional perspective. So I want to see what retail traders are doing. Generally, it's useful. It's not always going to give me loads of information, but to see what institutional traders are doing, and also just trying to pick up on the general market sentiment from places like Reuters, Bloomberg. Not having Bloomberg TV on, I'm talking about just seeing when they put notes out or articles out when they're talking about, if I'm looking to trade the New Zealand dollar, I want to see what type of news articles are out there in relation to either the New Zealand element or especially the dollar side to that. So by seeing what articles are being written, when you see a collective of articles all saying the same thing, then usually, because of crowd behavior, I'll be wanting to see the reasons why the market might want to go the other way to what the reporters are saying. So the sentiment comes in three ways. We can look at retail positioning, institutional positioning, but then also sentiment from what's being written in articles and what's going out there as well. And all of that's then helping me to form an opinion. Now, of course, if you're doing short-term intraday trading, you don't need all of sentiment as well as such. But if you're swing trading, then it's useful, nice to have when you see this sort of stuff. So what I'm showing you here is my general approach. Obviously, we're not going into too much detail, but that's how I approach the market. So basic technical analysis on the higher time frames first of all. Then once I have a view on a market, I've either then got to, like let's say with this New Zealand dollar example, then I've got to then decide, do I want to short it right now, or do I want to wait if, let's say I'm bearish on it, or do I want to wait for a rally to short it? Or is it down to another key support zone, and in fact I'm looking for some strength to come in to buy it off of there? So But that all comes from the larger analysis. So let's go with it at the moment that we say, right, it's the trend is down. I'm wanting to short this market. So that's when I have the choices to be made, and those choices will come from the techniques that we use to get ourselves entries into the market. So if the market's already had a bit of a run, I might be looking for a retracement technique. If it's been consolidating and then starts to have a breakdown, then I'll be looking at a more of a breakout type technique as well. And that's essentially it. So you just need a few techniques to help you get into a market. So we have techniques for getting us in if a market's already started to run, but also retracements as well. And so that's all it is. Trading is simple in many regards, but it's also very difficult. The simplicity of trading is you're trying to buy something which is going to increase in value, or you're trying to sell something which is going to decrease in value. That's it. That's the simplicity of it. But there are obviously a lot of facets to the market. The market is a complex living, breathing organism. And so what we're trying to do when we're looking at the technicals is basically try and read mass human psychology. And if we can get that right and see where the market needs to go, the market will be trying to go, remember, to at times to fulfill orders, and also the market is very often trying to move in a way which is going to upset the most traders as well. So and that's why you get these strong trends at times, because most of the time the majority of traders are not on these runs. It's the few. And the majority of traders are actually usually doing the opposite and buying all the way down, sort of thing. And that's why we see that retail trader positioning is always quite interesting as well. So there you go. So there's a little bit about what I do and how I approach the markets, whether it's currencies, whether it's stocks as well. So top-down analysis, into market analysis, and then just the techniques and the tricks, the tools that we use to get us into the trades. Once we've decided whether from the analysis whether we think the market's going to go up, generally speaking, or down, generally speaking, then it's just a case of, okay, are we looking to buy a breakout or sell a breakdown, or are we having to wait for a retracement and then do a retracement trade? Hopefully that's given you some food for thought there today. A slightly longer video going into the weekend here. Have a lovely weekend, and I'll be seeing you next week.